Let's talk about NIO. NIO is shaping up to be the next big thing in the Asian EV market. And I'm not the only one who thinks that. The Chinese government and JP Morgan are also very hopeful for the future of this company. Hello everyone and welcome back to Investing with Antoaneta. As promised today, we are going to take a small break from talking about Tesla. Instead, we will be having a look at another major player in the field of electric vehicles, but this time in China. Before we jump right in, I want to take a second to thank everyone for the positive feedback and to ask you to give me a thumbs up if you want to see more investing content in the future. Who is NIO? NIO is a Chinese automobile manufacturer. They are based in Shanghai and their COO is William Li Bin. NIO specializes in the production of electric vehicles and they are also one of the key players in the FIA Formula E Championship. Now, if you are like me and you aren't a big racing fan, you are probably wondering what this championship is. But don't worry, since I looked into it, and I'll tell you, Formula E is the world's first single-seater all-electric car racing competition. Well, that is not the main reason for why I'm excited about NIO stock, but hey, it is an interesting one and a valuable piece of information. What has been happening with NIO stock? As you can see, NIO stock was slowly moving up in price until October 14, when it jumped up in a big way. Now, as longer-term investor, I was enjoying that steady growth and looking out for opportunities to add more NIO to my portfolio. Come to 14 and I wake up to a massive price bump. A couple of minutes and a few Google searches later, I came across an article explaining the situation. The headline reads, JP Morgan sharply raises new price target to $40, representing 85% upside potential. Apparently, the JP Morgan analysis finally realized the tremendous potential in NIO and raised their price target. And please keep in mind, guys, that all of this happened after they gave NIO a neutral rating in their previous analysis on June 21st. The price target at the time was $40. In their latest report, JP Morgan Analysis admit that they missed the stock major rally YTD. And you wonder why I don't like listening to analysis? Anyway, analysts will rarely admit that they've made a mistake of this type, and the fact that they were willing to do this only highlights the potential of NIO. The same report goes to further state, we are updating the stock to OW overweight from neutral and set a new June 21st PT of USD 40 and based on 3.0 2025 EV to sales. Instead of trying to justify a higher PT, we review our long-term investment thesis based on our bullish top-down sector view, introduce 2025 earnings projection and draw implications to the current stock price. We come to the conclusion that NIO remains attractive from a long-term perspective. According to JP Morgan's projections, the company is expected to earn about 7% market share in the passenger EV electric vehicles market by 2025, or specifically about 30% share in the premium space that they are focusing on. Okay, but doesn't 7% sound a bit too low? Well, it really depends on how much faith you have in the company and how well you've done your research. Personally, I'm a big believer in NIO and I'm convinced that they will be one of, if not the most dominant company in China's EV sector. And don't worry, I'll share my reasoning with you here. Number one, NIO is backed by the local government. And if you have ever run a business, you should know that the governmental backing is a huge thing. For 2020, NIO has secured a $1 billion investment from several state-owned companies in Hefei. Number two, NIO is leading in terms of autonomous driving. Recently, NIO announced that their customers had driven 1 billion kilometers placing them miles ahead of their competitors. When it comes to the Chinese market, Tesla doesn't even come close. This is yet another moat that the other companies will have to invest in overcoming. Number 3, they have a great moat. Their innovative battery swap technology puts them miles ahead of everyone else. None of their competitors, at least in China, can even come close to the utility and comfort provided by NIO's battery swap stations. Remember guys, China is very densely populated. There are a lot, and I do mean a lot of people living in high-rise apartments of high-rise condos. This means that there is practically no space for the type of supercharging stations that Tesla is building in West. New swap stations are capable of swapping batteries in under 5 minutes, which again gives them an edge as far as the Chinese consumers are concerned. And keep in mind that they are already building these infrastructures. It's not some plan on a drawing board, it's already put into action. If the other companies want a chance to compete, they will need to also invest in this. NIO's CEO Li Bin announced that they've already completed over 1 million swaps as of the October 5th of 2020. Upcoming key catalysts. NIO is expected to deliver solid Q3 results in mid-November, with the forecasts pointing towards further gross profit margins expansion. Analysts expect an increase of about 12% versus 8% in Q2 2020. The newly launched EC6 crossover model is very hot right now. The company is currently working through a robust order backlog due to the initial production ramp and substantial demand. A new sedan model is also scheduled to come out in New Day. This will add more variety to the company's portfolio. They currently offer one crossover EC6 and two SUVs ES8 and ES6. I'm sorry if I pronounced them incorrectly. Recently, NIO's CEO Li Bin announced that he is expecting to deliver around 150,000 units per unit starting from 2021. NIO's aiming at doubling their production capacity to hit 300,000 annual vehicle deliveries. Naturally, this has skyrocketed the public's expectations of NIO. As a comparison, Tesla is currently pushing about 500,000 vehicles per year, which accounts for about 85% of the company's total revenue. If NIO manage to hit this number, then it's more than reasonable to expect their stock to hit record prices. Opportunities in 2021. Rising NEF penetration with an emergent and structural shift from businesses to consumers. The market is shifting towards individual buyers rather than corporates or customers living in cities with purchase quota. This is expected to broaden the EV market, and NIO will be able to benefit as long as they manage to keep their position within the top 10 by market share. The extension of the NEF subsidy program towards 2020, where the government subsidy scheme covers the battery swap business, is encouraging. The new model coming out on NIO Day next January is expected to considerably expand the company's portfolio and attract many of new customers. My NIO strategy. I'm currently very bullish in regards to this company, and I keep adding more NIO stocks to my portfolio on every opportunity. As I often say, long-term investors love volatility. Unless something drastic happens, like a shift in management or a publicity problem, I will most likely continue with this approach for the foreseeable future. And if you think about it, we've seen this situation play out before as well with Tesla. Back then, I made some excellent returns on my Tesla investments, and I'm definitely looking forward to NIO's future. And this concludes our brief look at NIO. Personally, I see a ton of promise in this company, and I will be looking to add more NIO stock to my portfolio as soon as possible. If you are interested in the EV market, I would highly recommend that you look into these stocks as well, but bear in mind I'm not a financial advisor. Thank you all for watching this video until the end, and if you enjoyed, please make sure to let me know by giving it a thumbs up and sharing it with your friends. As always, questions, ideas and experience go on the comment section below, and I'll get back to you as soon as possible. So, thank you very much for being with me. Until next time, stay green and motivated.